Hi guys, welcome back to my YouTube channel. My name is Brian Akwaka, full-time forex trader. Last time I told you that I want to specialize specifically on gold USD because it's normally easy for you to just focus on one pair for you to get a clear direction where the market is going to. So the previous week we've been seeing the gold has been on a consolidation mode. It has been failing to go above this point right here. You can see it has been testing. It was tested by this candlestick right here. There was that retracement. It came and then there was that lower previous support area that was broken at this point. It dipped to this point right here. And since last week, since the other previous month, the market has been on an uptrend. And how can you identify that the market has been on an uptrend? The market becomes on an uptrend when it's making higher highs and higher lows. You can clearly see it has been going up and failing to break the previous support area and then keep on breaking the previous resistant areas going upwards. So by that clearly we can identify that the market is on an uptrend. And how do you now put you can how do you now set your tools for you to be in a position to know when the market is will be reversing? So I put my trend line below easily recognizable support areas, and that when it gets broken at this particular point, we can easily now say the market on a downtrend. And there was this candlestick right here. You can clearly see that there was this candlestick that broke our trend line going downwards. And for me, I don't always just trade when the market breaks our trend line going downwards. What I normally do, I trade conservatively. In each and every break of structure, I have to wait for that retracement and then wait for confirmation. I don't just put buy limits or sell limits so that when the market executes itself, we just have to wait for that confirmation. And there was this confirmation, as you can see here. There was this candlestick with a longer upper wick. You can clearly see that it has that selling pressure, and then you can see the succeeding candlestick with that huge bearish candlestick. So what does that tell us? That tells us that this particular zone here would be our supply zone. So how do you now execute your going short order? Since the market broke our trend line, the lower trend line. Now it's giving us signals that the market will be on a retracement. So now what we do now we clearly mark that zone as a support area. No, it's a supply zone. Let me just find that candle. That Yeah, we clearly identify that area as a minute. There's yeah, we can let me just find it and then we show you how it's being done. Mhm. 2 minutes. I'm looking for the rectangle that would give us will. But let me just show you. Like, sorry, let me use this one. Yeah, right here. So yeah, minute. Let me use this one. After that retracement, you could see there was this area. There was this area. Sorry. Yeah, there was this area that was there was this area. Sorry about that. Is it hard to draw it? Yeah, you can clearly see, even if it's not showing you that clearly, but you can clearly see this area. We mark this area as our supply zone so that when the market comes and retraces that area, we now execute our going short order. So where will you be placing your take profit? So you basically put your take profit at the previous support area. Look at your left, and there's that lowest point at which the previous lowest point at which the price reached before it retraces. So that's where uh, you put your take profit. So basically, when the market passed our trend line going downwards, there was that point where the price kept on touching each and every point. So we now placed our trend line we placed our trend line above easily recognizable resistant areas. Remember, in a downtrend, you put your trend line above easily recognizable uh, resistant areas, in that when it breaks that point going upwards, you now understand that the market would be on an uptrend. So since it passed our trend line at this zone, we don't execute the market at that point. So we have to wait until the market retraces. So since the market passed this zone, there was that consolidation. There was a consolidation at this particular point here. So during consolidation, don't execute orders. So remember, forex market is all about patience, and it's all about casting your nets and have to be patient for fish to be in your net, so that when it gets there, you now execute that order. So remember, there was this consolidation, and there was this huge candlestick that passed our consolidation area. So now we term this zone as our demand zone, and there was the gap that was left between. There was a gap after that consolidation, and this huge candlestick breaking this zone. There was this gap between our pivot candlestick and the other candlestick. You can see there's this gap. So in normal cases, prices normally come back to fill this gap. As you can see, there was that point, the market came and filled that point. So these are these particular points where now you execute your going long order. So since the market has been retracing the whole week, we won't be executing any order until now the market pass either the resistance zone or the support zone. So we have to be patient and wait until it passes that zone. And then again, you can clearly see there was this zone right here. Sorry about that. There was this zone. Yeah, there was this zone right here. The market came, and then there was a break of structure at this particular point. So we term this zone as another supply zone. So since the market also failed to go above the main resistance zone, we have to be very patient and wait until it passes that zone. We don't know when, and we don't know what direction the market is going to take. Our work is only to analyze and get to understand what direction the market is going to. So what will be our confirmation? Our confirmation will be only if the market passes either straight resistance zone or resistance zone going upwards, or our support zone. When it passes our support zone, then definitely there will be a going short order. So we have to trade conservatively and wait uh, until the market closes. So you have to wait until the price closes is when you execute your going short order. And conversely, on an uptrend, when the market passes this zone 29, 26.19 going upwards, now be executing a going long order conservative. What do I mean by conservative? Once there's a break of structure, you went for a retracement for that gap to be filled, and then you execute your going long order. So that way, I'm not saying the market will be going long or going short, but we have to wait either way. When the market makes an uptrend, when the market breaks our previous resistance zone, or our market breaks our previous support zone, is when we'll be executing our order. So for now, we have to be very patient and wait until the market plays out. So in case you're new here, don't forget to subscribe and hit for me that notification bell to get notified every time I'll be doing more of analysis on gold USD from either way. So this is 1 hour time frame. So let's go to 4 hours time frame and see what's this information is giving us. You can clearly see the market on a 1 hour time frame is on an uptrend, but there's that long-term consolidation. So on 4 hours time frame, yeah, on 4 hours time frame, same information given by or given on 1 hour time frame. You can see there's the break of structure going upwards, and there's this long-term consolidation right here. So when the market breaks either previous resistance zone going upward, we wait for retracement, then we execute a going long order, and then we will be putting. Let me just how it uh, let me just find that minute. Yeah, in a going long order, long position, once the market spread passes this zone, we now execute our order at that point, then we will be putting our, remember, we will be putting our stop loss down there, then our take profit, you put it at the previous resistance zone. So let's say if there's that confirmation, you will now put your stop loss right there to consider that risk reward ratio of 2 to 1, or other people use about 3 to 1. And if the market breaks our support zone, you'll now execute a going short order. You'll execute a going short order, but conservative. In case the market does that, wait for that confirmation, then you put your order there, and then your take profit will be at your previous support zone. Yeah, like that. So let's wait, let's be patient and wait. I'm not saying the market's going to go short or whether the market's going to go long, but you just have to be patient and wait. Thank you so much.